Good afternoon once again. Today we're going to continue our discussion on financial statements analysis. And so far, what we have done was to learn how to compute or to prepare the statement of cash flows. We said that in order to prepare the statement of cash flows, we need the current income statement and the balance sheet, and also the balance sheet of the preceding year. We said that the statement of cash flows contain three activities: operating, investing, and financing. And using the indirect method, we look at the different changes in the accounts. Okay. And these accounts are classified as either operating, investing, or financing. And that the changes in the accounts could either be a source of cash and a use of cash. The general rule is that if the assets increase, then it's a use of cash. If liabilities, on the other hand, increase, then it's a source of cash. Okay. So after that, we learned how to, we computed, okay, we computed some of the metrics that we'll be using, okay, which are NOWC. Okay, so quick review. When we say working capital, it usually represents the current assets of the firm. And then its net working capital will be the difference between your current assets and your current liabilities. There's another measure called NOWC. So it's not NWC, it's NOWC, where you have the descriptor here, operating. So it's net operating working capital. And we have defined this to be the operating current assets, okay? Operating current assets minus operating current liabilities. So we looked at the different the components of your current assets: cash, short-term investments, receivables, inventories, and usually it may include prepayments. Of this, only short-term investments is not part of operating working capital because this is interest-bearing. So it will only include cash, receivables, inventories, and prepayments. And then we subtract it to the current liabilities. So any interest-bearing liabilities should not form part of your operating current liabilities. Okay, so we were able to compute that last time, and the net operating working capital for Microdrive is 796. There was an increase compared to 2020. So same formula for 2020. So there was an increase of around 53. Okay, around 53,000. Okay, then another measure that we looked at, another metric that we looked at is TOC, total operating capital, which is very important because this is the basis for the computation of the other metrics. All right, so for TOC, we have whatever operating working capital we have, net operating working capital, we add to it the net PPE, the net plant and equipment. So the total gives us TOC. Okay, so this is TOC, December 31, 2020, or this is the total operating capital at the beginning of November 21. Okay, which means that management was provided at the beginning of the year, they had 1516 operating capital to use for the operations. At the end of the year, it became 1796, which means there was also an increase in operating capital, total operating capital. The total investment in TOC was 279.8, which is the difference between the beginning and the ending. Okay, I'm sorry, the ending and the beginning. The ending for 2021 and the beginning for 2021. Management provided operations with an additional 280, around 280 operating capital. Then we looked at the concept of net operating profit after tax. As far as operations is concerned, this is very important because they would not want to be assessed based on net income after tax. And why is that? Because in order to arrive at the net income after tax, you have to subtract interest. And we said that interest is not the responsibility of operations. If there was a case where finance, for instance, borrowed a lot of money a big amount of money, and the interest was even greater than the EBIT, the operating profit, then that would virtually wipe out the operating profit of operations, right? Kasi mas malaki yung interest kaysa dun sa EBIT. And it will be unfair for management to assess the operating performance by including interest, by deducting the operating profit from interest, when in fact, operations does not have any control over this interest expense. Okay? So to compute the NOPAT, what we do is to not to charge operations with the interest expense. Okay, that's called responsibility accounting. Okay, we do not charge or we do not penalize operations for any item that they don't have any control of. And so the effect is that the earnings before tax is higher. Okay, and since the earnings before tax is your taxable base, then any charge to tax will be higher here for NOPAT. So this, even if the NOPAT was not charged with interest, okay, they will incur higher amount of tax because it will have a higher taxable base. However, it will still have a higher NOPAT will still be higher than your net income after tax. Okay, and the difference is the difference between NIAT and NOPAT is 61.6. Now, why did this become 61.6 and not 88? Okay, because if we will just directly subtract, then the difference would be 88. But we said that the use of debt, okay, debt is like a leverage. So it actually, in a sense, improves the operating leverage or the profitability of the firm because it reduces the tax rate. Okay. All right. And what's the difference between the EBIT and the NOPAT? I'm sorry, not the EBIT. What's the difference between the interest, which is supposed to be the value to be added to NOPAT, and the tax and the final value? Okay, the difference is 26.4, which is the tax savings that's generated from the use of debt. 58.7 tax versus 85.2. Okay, so to get the shortcut for NOPAT, we don't have to go through this. We just have to subtract your EBIT with the subtract the component less 1 minus tax rate. Okay, so we have here your EBIT, your operating profit, and then your tax rate. So your NOPAT will be sorry, your NOPAT will be, okay, it's your EBIT times 1 minus tax rate. Okay, as vis-a-vis your net income after tax, we're just copying from above. So the difference between your NOPAT and your net income after tax in 2021 is 61.6, which is this one. If we go to 2020, the difference is 42. Okay. All right. Let me pause for a while and ask for any feedback from you, class. So far, let me just, is the review clear? Kindly chat, please. I'll appreciate your feedback. I hope we can reach practically 100%. Okay, let's wait for the others to key in their response. Okay, I would appreciate the class giving their feedback. So are we clear so far? That's my question. Okay, a few more. Okay, a few more seconds. Di na dagdagan. Okay, so mga 12 students pa yung hindi nagre-respond. Okay, so I hope next time everybody responds. Okay, so the next one is free cash flow. Let me just move this here. Okay, free cash flow. What is free cash flow? So we'd like to define what free cash flow is. Okay, free cash flow is cash flow. Just small siya. So free cash flow is cash flow available for distribution to investors after deducting cash flow requirements for operating activities or operations. Okay, so that's our definition of free cash flow. It's a cash flow available, sorry, the spelling, available for distribution to investors after deducting cash flow requirements for operations. Okay, so let's take a look at this in greater detail. Okay, so first, what do you mean by investors? Who are investors, class? Who are investors? I'm sure you know the answer to this one. Okay, could you kindly chat, please? Who are investors? Okay, people that have a stake in the company. Okay, so let's be more specific. I'm looking at two investors. Okay, people who put money. Okay, thank you. People who invested their money for the company. Yes. So what are the two most important types of investors? So you're correct. These are people who put in money. So who are they? Class, who are they? Naglolo ko tong digital pen ko. Okay, institutional investors and retail investors. Thank you, Vic. So si Sherwin then, institutional and retail. Okay, yeah, I get your point. However, so from a financing perspective, from a finance perspective, guys, so we're taking a look at who investors are. Okay, yung example ni Sherwin at saka ni Vic, institutional and retail, these are types of retail investors, more on ano yan, more on customers, no? Retail customers and yeah, retail customers and institutional customers. Okay, so yeah, thank you, Ra. So we have Equity and debt. So, sino tong si equity? Sino tong debt? Wala ayaw sumulat. Okay, you know this very well, class. Investors, sino sila? Let's be more specific. Rafi, nagsabi ka ng equity and debt. So, investors, tao to eh. No? Equity and debt are not people. So, who are they, class? Investors. Okay, Raf, sige, please, you raise your hand. Let me acknowledge you.
Sir, for equity investors, they sort of have, I think, ownership in the company.
Yeah, so what do we call them? May pangalan sila.
Sir, either like owners of the business or maybe like the board of directors.
Ayan. Oh, guys, alam nyo na dapat yan. The owners of the business, they're called the
shareholders, sir.
Yeah, shareholders. Simple lang, guys. Shareholders, investors to mga to, no? Kasi they put in money. Remember, basic accounting equation lang. Assets is equal to liabilities plus equity. Any resource the firm owns is either financed by this, so ito yon, no? Yung C, or this, ito yon, yung shareholders. So ano yung si L, guys? These are the company's what? Hello? Class, they are the companies?
For liabilities.
Yeah, they're called creditors, di ba? Letter C to eh, letter C. Letter C. So kapag letter C, diba, nagbigay na ako ng clue na letter C siya. So they're the creditors. Okay? Creditors to mga to, no? So the two types of investors from an asset perspective or from a financing perspective are the creditors and the shareholders. Okay, born out of the assets that the firm owns, that the firm possesses, is either financed by borrowing from creditors or investments coming from shareholders. Okay, so they are the investors of the company. Now let's go back to the definition of the free cash flow. We said that the free cash flow is the cash flow available for distribution to whom? To the investors. Which investors? Creditors and shareholders. Okay? So when do we give them? After deducting cash flow requirements for operations. Okay? So based on this definition, I'd like to ask you, what are the specific uses of free cash flow? If there are for distribution to investors, given the definition of investors, can you identify 5 specific uses? So 1, 2, 3, 4, 5. So let's identify 5 specific uses of free cash flow. What will be, can you give 1? Remember, this is used, look at the definition. Saan natin gagamitin si free cash flow? Okay, so that will be your clue. Where are we going to use free cash flow? For distribution. To whom? To investors. Sino si mga investors? We discussed that. Okay? Pero kailan to i-distribute? After we deduct cash flow requirements for operations. Okay? Whatever is left, yun ang pwedeng i-distribute sa investors. Alright, so, can you give one particular use? Alright, okay, thank you. Yeah, Raf, you're correct. One is, actually, saan mo nakuha to, Raf?
Sir, I Googled it and then there was like one of the articles that had.
Okay, ito na yun, no? Yeah, you're correct, no? So number 1, na-identify na lahat ni Raf eh, payment of interest, di ba? Kanino ba yung interest payments? Para sa mga creditors, di ba? Payment of interest. Okay. In interest, guys, it's paid to your creditors. And then the amount can come from your free cash flow. Second is the payment of principal. What's principal? It's the amount owed by the company. So it's different from the interest. Okay. So if the company, for example, loans or issues a bond that's worth 10 million and the term is 5 years, okay, at the end of 5 years, the company has to pay the principal. Okay, the amount that it borrowed, which is 10 million. Okay, and then throughout the 5 year term, it depends if the agreement is monthly, semi-annual, yearly interest payments, then the company has to pay the interest depending on the agreed mode of modality of the interest. And then for the shareholders, we have payment of dividends. Of course, there are several types of dividends. The most popular ones are the cash dividends and the stock dividends, but it's mostly cash dividends. Okay, and then number 4 is do we have it here? Okay, acquisition. Okay, okay, so buyback shares, or what's another name for buyback shares? Class starts with the letter T.
Turnover, sir.
Turnover? No. What do you call when the company buys back their shares of stocks? And there's a reason why companies will do that. No? What do you call that, class? It starts with the letter T, and then you have R. Trade. No, it's not trade. But thank you. Which one? E. Okay, and then A. Okay, thank you, Michaela. Kindly share your answer to everyone, please. Okay, we call it treasury stocks. Okay, treasury stocks are stocks that have been previously issued already, and then the company repurchases it. Okay, and there are reasons why a company buys back its shares of stock. Okay, and lastly, this is a company can invest in non-operating assets. Okay, because we said that cash flow is what remains after the company has deducted the cash flow requirements for operations. Nauuna mo yung operations. So the formula for this is your NOPAT, okay, whatever net operating profit after tax the company has. And then, di ba sabi kasi in definition, after deducting cash flow requirements for operations. Okay, so asan ba yung operational requirements natin? Ito, di ba? Yung investment in total operating capital. Ito yung amount. This is the amount that was added to your operating capital. At the beginning of the year, it was 1516. At the end of the year, it was 1796, which means that the company added. They invested 279.8 in operating capital. So let's start by getting let's get the NOPAT. So we can get it from above, or we can get it here. Here. Okay. Here. This is your NOPAT for 2021. Okay, okay, I think we should change this. Yes, this is your NOPAT, and this is your net income after tax. We were comparing it last time. Okay, so it's F. So what happened to my formula? So your NOPAT is equal to net operating profit after tax, this one for 2021. And then we subtract to it how much was invested in operating capital, which is this one. Okay. And then we have free cash flow equal to the difference between the two. Okay. What is this? Yeah. Okay, so we have a negative free cash flow. Okay, the question here is negative free cash flow an indication of poor performance? Okay, we'd like to answer this question. Is a negative free cash flow an indication of a poor performance of the firm? Okay, the answer, class, is it depends. Not necessarily. Okay, it can be, or it's not also an indicator of poor performance. So what do I mean by it depends? Now just take note that free cash flow gets its values from two items here: NOPAT and net investment in TOC. So free cash flow, if it's negative, it can be also indicative of a good performance. And when is that? The negative here can be due to, say, a high investment in TOC despite a high NOPAT. Okay, so let's assume that the NOPAT is okay, because if we compare NOPAT with the previous year, 184.1, then there was an increase of 14,000 in net operating profit after tax. Okay, even if how much operating capital did the company have? Okay, so where am I? Okay, it generated 198.7. Okay, operating profit, and then there was a an increase in total operating capital. So if the negative free cash flow was due to the heavy investment in the company in total operating capital, then it's okay. That's good, because the company was investing more on operating capital, on assets, both current assets and long-term assets, which the company could eventually use to drive operations, to drive profitability. Okay, so if the cost of the negative, okay, sorry. Okay, if the cost of the negative free cash flow was due to a high a high investment in TOC. Okay, because the negative free cash flow can be attributable to this. Okay, there's also a sense where the negative free cash flow can be due to this. If the negative free cash flow was due to the fact that NOPAT was very low, okay, so maybe it was less than the previous year, or it pales in comparison with the direct competitors, then if that's the case, then the free cash flow, the negative free cash flow, we can say that it's a result of a bad performance. Okay, why bad performance? Because the NOPAT was very low. Okay, despite a regular net investment in TOC, you will have, of course, a negative free cash flow due to the low operating profit. Okay, so you have to analyze both. and take a look at it and qualitatively and even quantitatively see if what was causing the free cash flow was either the low NOPAT, okay, that can be that's one of the most glaring reason why the free cash flow would be negative, a low NOPAT and a high net investment in TOC. But a high net investment in TOC does not mean that the company is performing better. In fact, it's a good thing because the company is investing in inventories, in raw materials, in receivables, and in property, plant, and equipment. the obvious reason is that the company would want to generate more sales and beef up the sales, beef up the revenues. So you have to analyze this from this perspective, from the NOPAT and the net investment in TOC. In a similar manner, a positive, if the free cash flow is positive and it's due to a very low net investment in TOC, this could be bad also. Okay, we know that investing in the assets of the firm is very important because the assets will be the one to drive the revenue generating activities of the firm. Without the assets, how can the company convert these assets into sales or into revenues? Okay, if there's a low investment in TOC, and because of this, your free cash flow is high, it's positive, okay, do not be tempted to think that this is good. Okay, rather, if you take a look at free cash flow, take a look at it from these two perspectives. Okay, and of course, you can include this if it's negative or positive. Okay, so let me pause for a while. Did you get negative 81.1? Okay, so I will appreciate once again, a yes from you. Okay, let's give your classmates a few more seconds to answer that question. Okay, thank you. Thank you, class, for your responses. Okay, mukhang wala namang questions, no? Lahat naman yes. Okay, thank you so much. All right, so let's go next to, ROIC, this one, return on invested capital. Sige, let's narrate a story so that we understand this ROIC. Okay, so this is the story behind ROIC. At the beginning of the term, at the beginning of the year, okay, where's my digital pen? This one. Beginning of the year. Okay, so that's January 1, okay? January 1, 2020. Okay, operations management was provided with operating capital. Okay, so they were given this operating capital. So the question is, what did they do with this? So for the whole year of 2021, they were able to generate an operating profit, no? Net of tax. Okay, so they used this, which was given at the beginning of the year, in order to generate this operating profit for the whole year of 2021. Okay, question. How much was given to management at the beginning of the year? How much was given to operations? And then how much was operating profit generated? So I want you to key in two numbers, guys. The first one is how much was total operating capital provided to management operations at the beginning of the year, and how did they use this? When I say how did they use this, how much operating profit were they able to generate? Okay, so let me give you okay. Hold on, guys. Hello? Hello? Guys, can you hear me?
Yes, sir.
Okay, I thought I lost you. Wala. Okay, so I'll wait for your chat, guys. Two numbers, huh? Number one question is, the first number should be, how much was given to management? Binigyan sila ng pondo, no? How much was it? And what did they do out of it? What was their output out of it? So two numbers, please. Let me wait for the other responses. I'm just getting one response. What about the others, guys? Do you understand the question? Is the question clear? Okay, only one has answered, Rafi. Thank you. How about the others?
Ulit nga po, sir. Ulit.
Okay, question again. No? Sabi natin, the ROIC, return on invested capital, is a powerful metric to assess the performance of the firm. So sabi natin may kwento yan. Ang kwento niyan ganito. January 1, 2021, at the beginning of the year pa lang, meron ng capital ang binigay sa operations. No? Ang tanong, magkano yung capital na yon? Tapos secondly, okay, secondly, how did they use it? What operating profit were they able to generate out of the use of the operating capital? Okay, sige, two numbers please. The first number should be your TOC, and the second number should be your operating profit. So dadalawa pa lang sumasagot. What about the others, guys? Your big class, 31 na lang ngayon, no? Nawala yung tatlo. Okay, I'll give you a few more seconds, guys, and then we discuss. Okay, more answers, please. More responses. Okay. Okay, thank you. A few more seconds. Okay, at least nakakalahating responses tayo. Okay, let me check your answers. 1796, 198.7. 1796, 1796, 198.7. Okay, good. All right. Thank you, class, for your answers. Okay, so you're correct, no? So nung January 1, okay, January 1, 2021, magkanong operating capital ang binigay sa company, okay, sa operations? They were given, based on your answer, they were given, let me write that. Okay, may nag-chat pa, may humabol na answer. Let me see. Okay, thank you. All right. All right, so management was given. Okay, nawawalan naman yung digital pen ko. So, nagko-conflict kasi mouse at saka yung digital pen. Okay, here. They were given 1516.4, okay? Which is 100% not your answer. Sabi kong beginning kasi, beginning. No? Yung 1796, ending yan kasi balance sheet to di ba? Okay? Yung 1796, ending yan. December 31 yan ending to. So, ang January 1 natin, ito, yung end ng 2020 is the beginning of 2021. Okay? Alright, syempre magsisimula tayo sa unang-una sa January 1 kasi titingnan natin kung ano yung binigay sa company nung simula pa lang. Okay, they were given 15, 16.4, and then they were able to generate how much operating profit were they able to generate? Okay, here you're correct. It's 198.7. Okay, so nakapag-generate sila ng 198.7. 198.7 operating profit, no? Based on this value of operating capital at the beginning of the year. Okay. All right. Now, some would get the average of yung beginning at saka ending. No? For our purposes, let's just use the beginning capital. Okay, nakukuha niyo yung kwento, class. Management was given 1516.4 operating capital. And then they use that to generate this operating profit. Now, the ratio of that is your ROIC. Kaya nga yung formula ng ROIC is return on invested capital. Okay? It's different from another ratio that we're going to learn maybe on malamang sa Friday, yung ROA at saka ROE. Itong dalawang to, these are traditional metrics. Mas bago tong return on invested capital. Okay, so let's get the figures. Sabi natin si NOPAT is 198.7. Operating profit for 2021. Okay? And then, beginning capital natin is magkano ba yung binigay dun sa simulang-simula? Sabi natin, it's 1516.4. But sometimes you'll see ina-average to. No? But for our purposes, let's just use the beginning capital. Okay, so, yan. Therefore, hindi natin ito ng ang ROIC natin will be okay, NOPAT divided by the operating capital. So that's 13.1%. So how do we interpret that? Ano ibig sabihin yan? Ibig sabihin yan, for every 1 peso of operating capital given by management, the company or operations generated 13 centavos. No? Kasi ganito yan eh. So the ratio is just 0.13 or 13% divided by 1. Huh? Yung 1, si operating capital, beginning. Si 0.13, ito yung NOPAT. So nakapag-generate siya ng NOPAT na 13% sa bawat 1 peso ng operating capital. Now, ang question, is management able to create value for the owners of the business, for the shareholders? Okay, could I have a yes or no answer from you? Okay, sandali lang ha. Ang lalagay lang ko dito. So, ang question ko, ang ROIC, return on invested capital, is 13.1%. What do you think? Was management able to create value for the shareholders? Okay, kindly chat your answer, please. Your opinion on that, based on this ROIC na 13.1%. Nakapag-create ba ng value si management? I'll wait for your response sa chat. What do you think? Okay, let me wait for the others to respond. Yes or no lang naman yan. No? What do the others think? I only got 2 responses out of 32 students. Okay, 3. Okay, keep it coming. Thank you. So sana makalahati man lang tayo. Yan. Okay, good. We were able to have more than half responses from you. Okay, no. No. Parang domino effect ba to? Nakapag nag-no yung una. Nakapag no yung una, no, mag-no lahat. Okay, sige, simulan natin. Daryl, what do you think? Why did you answer no? What came to your mind? Bakit no na ano na operations was not able to create value for the shareholders? What went through your mind? Daryl? Hello, Daryl? Kindly unmute yourself. Daryl, are you there? Ba't walang sagot si Daryl? Okay. Daryl, wala kang sagot? Vic, next, ikaw. What's in your mind? Bakit no ang sinabi mo? I'm sure something crossed your mind, no?
Sir, ano po, it's the same lang din po as Rafa's.
Ano ni Rafa?
Because less is generated for every 1 peso invested.
Okay, how do you know na less? Bakit less? Bakit naging less? Sige, tatanungin ko si Rafa. Rafa, since it first came from you, na no, what do you mean by less is generated for every peso invested?
Sir, I just sort of relied on what you said earlier that for every 1 peso, the operations and the company generated 13 centavos. So
Okay,
it's obviously less than what's invested. So I think that
alright.
would be negative or a loss.
Okay. Thank you for that. Pero di ba pag, kasi profit ang pinag-uusapan natin, di ba usually naman yung profit, it cannot be greater than oftentimes it's not greater than the asset or capital that was, no? Usually, no? Usually, kasi ito invested capital yung pinag-uusapan natin. Although may mga instances naman na pwede, no? Na mas malaki kaysa sa one yung yung operating profit natin. Okay. Thank you, Rafa. Okay, may connectivity problem daw si Daryl. Okay. Are you back, Daryl? Currently black ang pagkabasa ko back. All right, sige. Thank you. Okay, so the answer here, class, is that si return on invested capital, yes, the answer is it was able to generate value for their shareholders. Okay. All right. I will not give you the answer now, pero hanapin niyo yung answer dyan. The answer why it was able to generate value for the shareholders can be found below that. No? Siyempre, medyo tingin kayo sa baba ng konti. Ano kaya doon? Bakit kaya sinabi ko, why did I say that management was able to create value for the shareholders? Okay, if you go down a bit, no, you'll find the answer there. Anyone would like to venture a guess? Why? Any guess, class?
Sir, what was the question po?
The question is, was management or operations able to create value for the shareholders? Diba? Initially, you answered no. And I told you the answer can be found. And I said the answer is yes. Management was able to create value for the shareholders. And my question now is why? And I said the answer there can be found below row 120. What could that be? Any guess, class? No guess? Okay, Raf?
Sir, I think a higher ROIC means that the company is doing better because they're able to have more funds and allocate more funds. But I'm not
Okay.
really sure on why.
Yeah.
Um, yeah.
You're at that point, thank you, Raf, for that answer. At that point, you're correct. The higher the ROIC, the better it is for the company. Just taking a look at the formula, the higher the ROIC, which is the quotient of no path and beginning capital, of course, we would want the company or management to generate more operating profit after tax given a value of your operating capital. So definitely the higher the ROIC, the better. But my question is, my answer was definitive that the company, that management was able to generate or create value for the shareholders. Okay. And the question was why? Okay. So let me answer that in the interest of time. Okay. So make a correction here first, class. Assume that there were 15 million. So this would be 15,000 actually. 15,000 shares outstanding because the figures here are in the thousands. And that this one kindly put here weighted average cost of capital was 8%. Okay, so that's given here. After tax or weighted average cost of capital. Okay, so the answer, class, lies here. Okay, the company earned ROIC 13.1%. Now the question is how much was the cost of capital to the company? When we say cost of capital, how much was the cost to the company of producing capital? And that's what the WACC is, the weighted average cost of capital. And the WACC is 8%. Okay? The WACC is 8%. So what does that mean? The cost of borrowing money, of raising funds is 8%. The return from these operations is 13.1%. So did management give a good account of itself? Yes. Why? They were able to generate, okay, a return on capital greater than the weighted average cost of capital. If management is not creating returns on invested capital that's more than the weighted average cost of capital, then we say that management is destroying value. So mas mataas, no? Yung return on invested capital na pinerform ng management is higher than the cost to get capital. Therefore, we say that management was able to create value for the shareholders because the ROIC is greater than the weighted average cost of capital. If the weighted average cost of capital was higher than the ROIC, then we say that value was destroyed. Okay, so let me quickly just discuss with you how the weighted average cost of capital is computed because I don't think I have already discussed that with you. So let me just use another pen. All right. So we'd like to know how is the weighted average cost of capital computed? Okay, remember the WACC is a very important number because this is what management uses in order to assess whether a project is okay or not. If the return of the project is higher than the WACC, then go proceed with the project. However, if the return of the project is lower than the WACC, then that project is rejected. So how does a company compute for the WACC, weighted average cost of capital? As the name suggests, it's weighted. Weighted in average. Yung cost of capital. Ano ba yung mga sources ng capital? Okay, ang sources ng capital pwedeng sa debt, okay, and equity, di ba? And we can subdivide equity into preferred stock and common stock. So, the formula for WACC, okay, it's equal to, it's the summation of weight of the financing multiplied by the cost of financing. Okay? So, let's identify three sources of financing. Number one, the debt. So, ang formula, WI times K sub I. So, it will be the weight ng debt times the cost of the debt. No? And then may sinasama pa dito, 1 minus tax rate. Okay, take note that if tax rate is, for example, 30%, ano mangyayari? Yung cost ng debt will only be 70% of the whole. Bakit 70% lang, hindi 100%? Kasi nga, di ba, there is tax savings when you use debt. Okay, so the company is able to save based on the lower earnings before tax because of the interest expense. Therefore, it makes the cost of debt lower. Mas nagiging mura yung cost of debt kasi nga may mga interest na nai-incur pag debt, and then the interest becomes tax deductible. So bababa talaga yung taxable base ng company. All right? All right. And then you add weight ng preferred stock times cost ng preferred stock. Okay, wala ditong 1 minus tax no? Kasi wala namang tax implications tong preferred. And then another plus weight ng common stock times cost ng common stock. Okay, the sum of this is called your weighted average cost of capital. So if you know the weights and if you know the costs, then madali i-compute yan. Arithmetic lang yan. No? Yung weights madali. No? So for example, you have debt here. Debt, you have preferred stock. Kunyari may preferred stock tayo. And you also have common stock. Okay, the weights are easy to compute. Okay, so for example, let's put this at 40. And then this is at 60. And then this is at, let's say, so 40, 60, 40, 30. And then this is, let's say, 60, 70. Okay, so let's say this is the composition. Ayusin ko nga kasi mukhang malabo yung ano ko, no? Yung okay, so we have preferred stock. And then common stock. Let's say this is 70 na lang. So, and then we have napalikan ko 30. And then let's say we have 80, for example. Okay, so this is the amount, no? Amount ng debt, 40. Amount ng preferred stock, 30. Amount ng common stock, 80. So the total of this is 150. Okay. Therefore, it's easy to compute for the weights. Ano yung weights niya? So si debt will be 4 out of 15. Bakit? Just get the proportion of the debt and the total. Weight lang siya. And this will be 3 over 5 or 3 over 15 pala or 1 over 5. And then this is 80 over 150 or 8 out of 5. Alright, so ito yung mga weights nila. No? So, pag alam natin yung balance sheet, alam na rin natin yung weights kasi kukunin lang natin yung proportion ng debt, ng preferred stock at saka ng common stock to the total. No? Alright. Okay, so alam natin yung weight ng debt and then ito kukunin natin to. Yung cost ng debt, yung cost ng preferred stock, and yung cost ng common stock. So there are ways to compute for this, which of course is not part of this course. Medyo advanced yung a bit of intermediate finance yan. So sa finance, pinag-aaralan kung paano nakukompute to. And then, guys, okay, I'll give examples. Ano? So yung isa, din natin 6.5%. Yung isa naman, 5.8%. Yung isa, 4.3%. Okay. All right. Bigyan nyo nga ako ng letters. Okay. D, P, at saka C. So, tatlong letters, may comma. O, wag nang magkama, sige. Ano to, guys? What's this? Is this the preferred stock? Is this the common stock or the debt? So yung first will be what is this? The second will be kung ano yung 5.8. The third will be kung ano yung 4.3. Sige nga, class. I'll give you a few seconds. Sino kaya yung 6.5% na yan? Sino yung 5.8% at saka sino yung 4.3%? So take a guess, guys. So give me 3 letters. Sa chat box, please. Can please let's hurry up a bit, guys, kasi tinitingnan ko yung time, may mga i-compute pa tayo. And then we're running out of time. We have to finish this. I don't want to continue this next meeting. Okay, so isa pa lang. How about the rest, please? Take just an educated guess. Kung ano kaya, saan kaya dito si debt? Saan kaya dito si preferred stock? Saan kaya si common stock dito? Okay, bring it on, guys. Only 2 responded so far. Let's wait for the others to give their opinion on which is which. Which is the D, which is the P, which is the C. Okay, guys, only 2. Come on. How about the others, please? What do you think? Which of this is the debt, cost of debt? Which of this is the cost of preferred stock? Which of this is the cost of equity, common stock? Generally, no? Only 3. I hope we can have more than 50% responses. And I'm running out of time. Okay, so please, may I have your participation, please? So which is which? Are you there, class? Only 3 responses. Okay, let's have more, please. Which is debt, which is preferred, which is common? So that's a 16.7% participation rate. Okay? Naging ano na, naging 20% na. Okay, please. Ayan, thank you. So more, please, more. Yeah, good. Thank you, thank you. Okay, let me see your answers. Okay, so CPD, CPD, CPD. Ba't mukhang pare-pareho kayo mga answer? May DCP, CPD, CPD. Okay. All right. Mostly are CPD, my DCP. Okay, the answer, guys, is the 6.5. First, the 4%. The 4% is the debt. Bakit? Bakit debt to? Okay, the least risky among these 3 financing is the debt. Bakit least risky para doon sa mga nagpapautang? Kasi constant yung payment ng interest, no? Every term, depende kung ano yung term, kung monthly ba yan o annually, binabayaran si debt, no? Interest. And at the end of the 5 years, babayaran ng yung principal. The next is your preferred stock. Okay, preferred stock. Si preferred stock naman, parang debt yan. Ang tawag sa kanya, quasi-debt. Bakit? Kasi si preferred stock, parang may ano din yan may dividend siya on a regular basis. So parang kumikita din siya, may interest din siya. Okay? And then lastly, si common stock. Ito yung common stock. Okay? Ito yung pinaka-risky, kaya ito yung pinakamahal. Okay? Walang kasiguraduhan na in the event of liquidation, si debt yung unang babayaran. Okay, and then si preferred stock. And then mahuhuli na si common stock kung may matitira pa. Bakit ba magli-liquidate yung company? Siguro na bankrupt na sila. They became bankrupt. And so it might be very difficult to sell off its assets, okay, to its fair value. So sometimes the companies would sell off their assets at a discount. So they will not be able to raise all the money they need to pay off the investors. But the first ones to be paid are the debt, the creditors, and then the preferred shareholders, and then the last one, common shareholders. Okay, that's why consistent with the principle of risk and return. Okay, mas mataas yung risk ni common stock. Kasi sabi ko nga, in the event of liquidation, pwedeng hindi pa nila ma-recover yung amount nila. Okay, that's why the required return should be higher. Okay, so, and then you just use this arithmetic, madali naman i-compute and multiply lang, and then add everything, then you get the weighted average cost of capital. Ito yun. So whatever cost of capital you get there, you compare that with your ROIC. And if your ROIC is greater than 8%, which is the WACC, then okay tayo. Okay. So kapatid nitong ROIC is this EVA. Itong EVA, economic value added. So let's compute for this first. What is the economic value added? Okay, this was developed by Stern and Stewart. Very practical yung ano nito, class. Very practical yung ibig sabihin nitong economic value added. Okay, as the name suggests, class, economics yung root niya, no? Economic value, hindi accounting value. So this is where finance and accounting differs. Okay, kasi si financing, technically wala silang concept ng ganito sa financial statements. No? So how is this done? Okay, again, babalikan natin si TOC beginning. Yung TOC beginning, di ba? Binigyan yung company ng 15, 16. Okay, let me just shortcut the explanation kasi magta-time na. Now, ang tanong, class, libre ba to? Sino nag-provide nito? Well, yung mga investors who are the creditors, di ba? And the shareholders. Galing sa kanila yan, yung perang yan. No? Kasi di ba, remember, assets is equal to liabilities plus equity. Saan nanggagaling resources ng company? Dun sa contribution ng creditors at saka ng mga shareholders. No? So lahat yan, provided nitong dalawang to. Now, yung pinrovide nilang operating capital, 15, 16, okay, kung tutuusin class, sa accounting, parang hindi kino-consider yan, hindi china-charge yung management sa paggamit yan. Sa EVA, ang ano natin dito, ang concept is that there's an opportunity cost for the investors, which means that the investors, creditors, and shareholders could have placed the money elsewhere. And then they would have earned interest in that. So ang gagawin natin dito, yung TOC na to, hindi natin i-free yan sa management. I-charge natin sila. Anong i-charge natin? Anong rate na? Parang papatawa natin, quote-unquote, ng interest, ng charge. Ang i-charge natin, ang gagamitin natin yung WACC natin, 8%. Okay? So yung capital na to, na pinovide ng management, ng company sa management, sa operations, it's not free. So we're going to charge management with that. No? So i-compute muna natin si NOPAT. Kunin na lang natin pala here. NOPAT is 198.7 ito, di ba? 198.7. Okay. In generating the NOPAT, okay, how much capital was given? Binigyan ang management ng 15, 16. Kunin ko na lang dito. Management was given with 15, 16.4. And then, the cost of capital is 8%. So, ang gagawin natin, i-charge natin si management ng paggamit nito, itong 15, 16. Kasi nga, hindi dapat free yan. There's opportunity cost from the perspective of the ones supplying this capital. So, ang charge to capital natin will be 15.6, 15, 16 times 8%. Yan ang charge to capital, 121.3. No? So nakapag-generate si company ng 198.7. Pero ang cost ng paggamit ng capital is 191.3. Therefore, yung difference ng dalawa, yung operating profit na na-generate minus yung charge sa gamit ng capital is 77.3. Okay? Now, was value created? Yes. Kasi mas malaki yung na-generate na operating profit kaysa dun sa charge ng capital. If the NOPAT was less than the charge on capital, we will have a negative EVA. And the negative EVA means the company destroyed the value for the shareholders. So this is positive, which we expect kasi nga si ROIC is greater than WACC. Okay? We expect that to be positive. Okay, there's another way. Okay, so pag positive si EVA, value was created. If ROIC is greater than WACC, value was created. All right? So there's another way to compute for the EVA, and it's based on ROIC. So alam na natin si ROIC, di ba? Si ROIC is, na-compute natin, 13.1. And then, si WACC, kunin ko na lang dito, WACC is 8%. No? All right. So you notice na yung cost of capital is less than the return on invested capital. So okay yun. The difference is 13.1 minus 8. The difference is 5.1. Okay? So para ang net na interest ng company is 5.1%. So we will let the capital that was given at the beginning of the year, 15.6 turn, earn this net, parang net interest, no? So 15.6, 1516 multiply that by 5.1%, you get 77 point. Okay, so pareho lang sila, no? Two ways to compute for your economic value added. So was value created? Yes. Okay? So itong EVA na to, nagsimula lang itong mga 1990s, no? Developed by Stern and Stewart. But it's now being used in order to see if indeed management is creating value for the shareholders. Itong economic value added. Okay, it's almost time. Last na lang ito guys, 1 minute lang to 2 minutes. Okay, there's another measure called MVA, market value added. Paano naman kino-compute to? Take a look at the formula. Ko-compute lang natin yung market value. Paano natin mako-compute yung market value? Magkano yung price ng stock ngayon sa merkado? Tapos ilang shares yung outstanding. So dapat malito class mo. You should be in thousands. Okay, another correction is that thousands na to, so dapat make this 15 lang. Kasi 1,000 siya. Eh, ang shares of stock is 15,000. Eh, since lahat ng data natin in 1,000, so dapat gagawin din natin to in thousands, which is 15. Okay? So, magkano yung stock ngayon? So, the stock at this point is 65 pesos per share. Alright? Yan ang stocks natin. Yan ang value ng stock. Ilan yung shares outstanding natin? 15,000. Okay? So, kung alam natin yung number of shares outstanding, tapos kung magkano yung stock ngayon, makukompute natin yung market value, which is 65 times the number of shares. Sorry. 65 equal to 65 times 15,000. Okay. So the market value or market capitalization is 975,000. And then i-compare natin, magkano yung book value? Sa balance sheet, magkano naman yung equity? So tingnan natin, is equal to equity is, tingnan natin total common equity. The total common equity is this one here. It's 940. Yan. Diba? Total common equity is 940. Enter. All right. So, okay. Value was also created kasi mas malaki ngayon yung market value. 975 minus the book value. Okay? Ibig sabihin, class, na based on the market prices, mataas yung value ng company compared to the book value. So if the MVA, if the market value added is positive, then we also say that value was created. So iba yung mini-measure ni MVA at saka ni EVA. But EVA is a more powerful concept. No? Kasi dito, tinitingnan natin yung NOPAT na na-generate. Tapos tinitingnan natin magkano yung capital na ginamit. Tapos i-charge natin si management sa paggamit ng capital na yan. And then titingnan natin yung difference. If the difference between your NOPAT and your charge on capital is positive, then you'll have an EVA which is positive, then value was created. Okay? All right. So last question, guys. Paki-chat naman please kung okay so far yung discussion ko. Okay, if you have any questions, you may remain after class. Sige, Lance, please. Okay, how about the rest? Sige, let me, and then I'll dismiss you now. Yung mga may questions, you can just remain. No? Okay, so, okay, Lance, babalikan kita, ha? Kasi time na. Okay, so thank you so much, class. Thank you for your responses. We'll be meeting each other on Friday, and then we'll use we'll continue with the ratio analysis, okay? And then let's see whatever we finish on Friday, that will be the coverage for the quiz on, and let's talk about it, quiz on Tuesday. Okay, thank you so much. Yeah, sige. I hope you learned something, no? Sige, you may go, class, you may go. For the rest of you who have questions, you may remain. Sige, Lance, what's your question?
Hi, sir. Thank you.
Sorry?
Thank you for your class, sir.
Thank you, sir.
Thank you. Thank you, guys. It's been nice having this class with you. Thank you. Okay, so si Julio,
Sir, if you could, if it's possible lang po, I
sige,
wasn't
yung
here for
formula.
our roll call for attendance, so
Okay, sige,
but
sige.
I was able to join your class a few minutes after, sir.
Okay, sige, sige.
All right, thank you, sir.
Lang, ah. Okay. Okay. So, sino may question about MVA?
Hello, sir. That's me, and I was checking market value and or
Okay.
capitalization.
Yeah.
Oh,
Market value
Oh.
or market capitalization.
it's just multi. Oh, it's just multi. Oh, it just
Yeah, multiply mo lang, no? Kung magkano yung, parang ano, ilang shares ba yung company? Tapos magkano per share? Diba? Ito yung per share price eh. Stock price niya. So 65 per share times ilang number of shares, that's your market value, market capitalization.
Oh,
Market value siya kasi market price to, no? How much the stock is trading at the market now.
Okay, sir. Thank you.
Okay? All right, thank you. Sige, any questions? May question pa yata. Sino pa yung nag-raise kanina? Yes, Julio?
Sir,
Sorry? Okay, linagay ko rin yung formula text dito. Pati dito na rin. Yes, Julio, what's your question? Yes? Nag-chat ka ba? Can you show the formulas for the last two tables? Okay, yeah. Okay, yan na. Pinakita ko na siya. No? There.
that's it, sir.
Okay? Did that answer your question, Julio?
Yes, sir.
Okay, good. Tapos, sino yung magpapa-attendance? Wala namang question? Okay, so attendance na tayo. Sinong magpapa-attendance? Hello? Mark, ikaw ba yun? Si Choi siya, no? Si Choi, I think. Okay, no more questions?